Hey, what's up, guys? Welcome back again for our third episode with AB Investments. Hopefully, all episodes are enjoyable and fun and informative in a way. Um, okay. So now we're gonna jump to what do I think as a non-financial advisor? What do I think? Why do I think that the repo and reverse repo are very crucial to what is happening with us? Why does it relate to us? Okay. So there is, and this is very like it goes very deep. It's kind of like we've mentioned this before. It's kind of like a deep state mindset you need for this one. And I've activated mine a long time ago, and this is why, like, using these thoughts and like using this way of thinking will get you much closer to the absolute truth, because there's no such thing as conspiracies without, like, in a way, there's no such thing as smoke without fire. So we're gonna go look at the repo and reverse repo. As far as for April of 2021, this is when the reverse repo operations started going out of their norm. Okay, so back then, I still have all my stocks in AMC or even GME, but the difference here is when at that time I saw something huge. When that started going up, that showed me then that, like, to the levels that they were in. I mean, they were like at that time they were at, when they peaked, I think it was like over a trillion. Yeah, it was over a trillion a day. And let me just look this on this real quick. Yeah, toward the end of March, and then it happened. Yep. So toward the end of March, that's when it peaked over a trillion, because the repo and reverse repo were going from 400 million, 200 million, beginning with back in the 2020 area or time frame, which is when the market really needed the most help back then. And then as it continued to go up and up and up, by March of 2021, that's when we started going up the ladder above the $1 trillion. So at that time, like, I had this crazy feeling by looking at all this, seeing how much AMC in particular was suppressed. And this is why I said, like, thinking with this and picking what was completely at that time suppressed. Like, it could have been obviously GME, and GME did run up to the $300 range, but since we previously ran up to the 400s, now the expectations for GameStop is to finalize its final step, which is go up and squeeze into the true numbers, that the monstrous numbers that we expect from it. So at that time, AMC have previously only squozed to $24, $27, which was back in January 2021. And then it was suppressed right there and then. It did not have all the craziness that and all the wildness that happened with GameStop in January. It was cut short right there with a bunch of other stocks like BlackBerry, koss, many other. You get where I'm going with this. So when I saw that at that time frame, that's when I entered, and I have went crazy long on a lot of options. And when I say a lot, I mean a lot. And at that time frame, this is just to giving you a story of, like, it also, like, with me telling you about the repo and reverse repo, also giving you a little story of what went with me. And at that time, I remember that the option chain for AMC, the highest it could go to was up to $40, and that was it. And that was, at that time, that was like the media and everyone, including investors, saying, I wish it could just go up to 40 or 30. There was no way that it will go to 40. And guess what? Yeah, I'm not advising you to go and act like and become a gambler or anything, or gamble on options, because again, there are so many things to options than just call options and put options. There's so many, so many things that you have to learn about the option chain before jumping onto that, unless you're just basically YOLOing and you're saying, hey, I'm gambling at this point and I just want to throw this on there, and that was it. For me, it wasn't just a gamble. I mean, there is a lot of it. I mean, some of it has a lot to do with like kind of like chance because of timing, and that's the only thing. But as far as an educated guess, I made my part based on all these things that I'm telling you throughout this channel all this time. And one of them, one of the trigger points for making that move was the repo and reverse repo, because I knew that at that time these guys were truly hurting for money. And I believed that at that time that the system and the markets were not the only thing that were going into those repo and reverse repo agreements. I was able, since being in the market for so long, I was able to see that, you know what, and this is my guess, until now is still my guess, that, and no one can verify this, obviously, according to the law and all that stuff yet, but a lot of people have some sort of idea that that is what's happening, you know. I'm not the only one, but by law, no one can say that it was, yes, officially found out and this is what it is. Down the line, I believe that that will come like years down the line from now, or perhaps when this whole thing falls and they need, you know, the DOJ brings it down and tears it down. I mean, you'll see this in some reports, and I'm pretty sure of it. If not now, down the line, so many years later, you'll see that. So I was able to see that these guys, obviously after the January halt and everything, that these guys were not, you know, like, they were caught with their shorts hanging down, and eventually they had to come up with new systems. Now, they figured this out back in 2021. The only thing, though, with the GameStop thing, the only thing that made it more amazing for me, I would say, was the fact that when they came together and made up all these rules, that's suddenly when these repo and reverse repo transactions started flying. And when I say flying, as in like going up crazy, like they were in the 200 and 300 million per day repo and reverse repo transactions. They started going up on a weekly base by gigantic numbers, to the point where by April, I mean, you're talking about just from end of January, which is beginning of February, to beginning of April. So in the span of 2 months, they were at the $1 trillion a day of repo and reverse repo transactions. So for me, I went ahead and I made a wild guess, and that wild guess was that we were going in those repo and reverse repo transactions. Our own play was going into that, and this is how these guys were able to load, like basically the bad guy for us would go to the bank. The bank goes to the Fed. The bank get the bank gets the loan and gets the cash, gives the securities over, and then comes back. Now, this is the collateral that he offers to the Fed. Now, the crazy thing is that in that collateral, what is lying? It's supposed to be federal, only government securities, bonds, indexes, and stuff like that. But I do believe, for me, and this is not, financial advice, guys. I'm not saying that this is the case, but this is just my opinion on it. You know, it could make some sense to some of you, and it could not make any sense to any of you. So again, that's just me. I believed that at that time they were able to go ahead and put all their their positions, all their shares that they have purchases, all their shorts that they have, whatever they're doing, they were putting it with the bank to get the loan from the bank, and the bank was giving all those all their bonds and indexes and all that stuff to the Federal Reserve as collateral for the loan that they were going to get from them. Now, the Fed, whether it knew or it doesn't know, I'm leaning a little toward more they knew, but whether they didn't know that inside those, if they opened, dig and dug deep in those, like really deep, and check those IWM, and oh look, there's a lot of AMC and GameStop and meme stocks in here, and many of them were the possibly the synthetics that were being thrown around on us, uh, and basically the Fed was giving them for this, and now when this guy got his money, the bank gave it to this guy. This guy came back, and this is why you see the control on the market, on the price suppression. You see them suppressing the price on a stock on a daily base, but they're living day to day, because by the next day they have to come back with that money, give it to the bank. The bank makes this little interest, which was 0.3 to 0.5%, something very small, but it's big in terms of the total amount of the loan. And then the bank goes back and says, okay, give me back my securities, and to the Federal Reserve, here is your money. And the Federal Reserve makes, like I said, the 0.3 to 0.5%. So in this case, all three parties are satisfied, except one, which is us. So at that time, I went long. This is going back in history again. I went long at that time. I saw that they needed that liquidity really bad. I went really long, like very, very, very long on many, many, many calls on specifically AMC. And boy, did that pay off just 2 months after that. Crazy payout. I'm going to end this video right here, guys, and I'm going to come back to talk to you about what the ATS is, which is like what it is about, what the Federal Reserve, what the SEC just passed, and a presidential executive order. So much love, bbby Investments.